I'm Bob Coleman, and we're talking Main Street and the small business lenders who make it grow. Thank you for this week's sponsor, Moody's Analytics. Here's this week's top story. What is wrong with the SBA 504 loan program? There's a lot of discontent out there. 40% of those of you who responded to our survey, and we're talking almost 200 people, find that it is unmanageable. Listen to Lance Sexton and I discuss this.
Very good. This is what we talked about, the news of the day. We did this survey, and Lance, look at this chart. Back in 2012, SBA 504 was at $6.7 billion. SBA 7A was at $15.2 billion. Here we are 5 years later. 504 is down approximately 25%. 7A is up 67%. What is your take on those numbers?
Bob, I don't have a crystal ball, but I have my personal opinion. So I'm going to offer my personal opinion. Lenders got used to, first of all, lenders got used to the 504 refinance. It got pulled out from under us. When it got pulled out from under us, we started looking for alternative ways to do the same project. And quite often that alternative way was using the SBA 7A loan. And then 504 refinance got brought back. Well, we got comfortable doing a lot of these projects using the 7A product. The other thing is interest rates. And if you've been in the SBA lending game for a long time, interest rates have been relatively low. So the interest rates on the 7A loans have not been unattractive to borrowers. Now, we've had multiple rate increases last year. We're proposed, the Fed says we're going to have 2 or 3 this year, 3. And I think the thing that we're going to see is borrowers are going to come back to wanting the 504 product because that long-term fixed rate component on the debenture issue is going to become more and more attractive. But I was talking to a young lender at my bank who had never been in a rising rate environment. And, he had been lending since about 2009. And it was like we had fixed interest rates for 10 years. And all of a sudden, we're not in that environment again. We're going to see borrowers get more, fall in love with the 504 product more as rates go up because that fixed rate component. And as rates change, the uncertainty, many of your borrowers have experienced a bump in their interest rates. And I think as that continues, your borrowers who have real estate projects are going to say, hey, what about that 504 loan with the debenture portion that's at a 10-year fixed rate?
But in the meantime,
20-year fixed rate.
But in the meantime, Lance, there's a lot of discontent in the industry. 40% of our people who did our survey say that program is unmanageable. That's a pretty high number. So it's there's a lot of frustration with SBA. The CDCs feel the rules are being changed in the middle of the game, and they're having to manage to a new set of standards than they have in the past. Credit elsewhere is the classic one. We got a lot of comments that saying, wait a minute, 504 is a jobs-based loan program, not a credit elsewhere-based loan program. How do you feel about that criticism of SBA's now emphasizing credit elsewhere versus job creation?
Well, and I think it's a result of Congress saying, hey, wait a minute. SBA is making a lot of loans that banks ought to be doing without SBA. So whether you like credit elsewhere or you don't like credit elsewhere, it's a fact of life, and it's become a critical element. Anytime you get an on-site review, they're going to be looking at credit elsewhere. So theoretically, SBA lending, whether it's the 7A or the 504, should be made to people who can't get financing otherwise on normal terms. So I don't see why credit elsewhere shouldn't apply to all SBA lending programs.
I did a webinar on preparing the SBA credit memo, and I thought you'd appreciate this clip. Who should the underwriter prepare the credit memo for? What is his or her audience?
But you can do whatever you want. This is for you. SBA does not mandate how this looks. So that's it. Okay. My other key thing on this is, bear with me on this, but read through this slide. These are all the people. This is the audience of who's going to be reading your work. And there's a lot of different readers. I encourage you, though, that your voice, who you write for, is the last person listed. That is Herndon. I would write this assuming that the loan is going to fail. I would also write this assuming the loan is going to fail within the first 18 months, because that's when Herndon will review it. And if they don't like your work, they're going to have a hard problem cutting that check to honor the guarantee. So what that means is, let's be conservative in our collateral, and let's be prudent in type of recommendations we make. For example, the Inspector General criticizes underwriters when they make horrible, they throw in the projections, and the projections have nothing to do with reality, and they say, we're going to have a restaurant that is going to increase sales by 100% a year and have a 25% net income. Well, that's not reasonable. But if you put that in there, you're gonna have a guaranteed denial. Another one is collateral. We have this collateral that's worth $1 million, and then we sell it 24 months later. It's only worth $100,000. So anything you put in there, you're going to assume Herndon's ready for. There's nothing you can do about the risk if you have a company where there's a death of the owner, or something bad happens to the restaurant and you have E. coli. That's a risk, and we all understand that. So write the credit memo assuming that the loan will be liquidated. And this especially when you're talking about collateral percentages and projections.
During last week's office hours, Lance Sexton and I discussed in what format should your borrower submit the projections that the underwriter needs to underwrite.
Yeah, this is sort of a trick question. All four are correct. Actually, number one is more correct. Number two, the SOP does say in the new revision that for a startup, it must be detailed. It doesn't say what the detail is. It just says it needs to be detailed. But I put this in there. We don't need, you do not have to accept an Excel spreadsheet. You can accept a 8.5 by 11 sheet with numbers on if you're comfortable with that.
Well, and Bob, one thing I love to see in a set of projections when I receive information from a prospective borrower, I like to see a summary of assumptions. I want to know where the numbers came from. Quite often you get projections and, they're doing $200,000 a month. Well, tell me why. Tell me how.
Lance, you're absolutely correct. The SOP is very clear. They want the assumptions, and you and I are in agreement. I'm more interested in the assumptions than the raw numbers.
Well, and one thing, Bob, that I'd like to comment, there are a lot of people involved in SBA lending who say projections have to be a certain way. Well, the SOP doesn't say a thing about how the projections have to look. It does indicate that you need those, and it does give a little bit of guidance on startups. But I think this is a very big, prudent lender area. Mm-hmm. And those four responses you gave, Bob, all four are correct, like you said. All four are correct. But, one addition I would put to that, guys, is here's my best practice. I want the first year month by month. I want years 2 and 3 at least annual, but I would prefer month to month. You got to have the new loan payment in there, or else how are you going to calculate debt coverage? And I like a summary of assumptions that explain where the numbers came from. And the final thing that I think is important is the borrower's signature, because I want SBA to look at it and not think, when I looked at a purchase package when I was at SBA, if I saw a borrower's signature, then the borrower's taking ownership of the projections. They're aware of what's being presented. If there's no borrower's signature, it could have been the banker, it could have been the BDO, it could have been, who knows?
This next story is a cool one. We are finalizing our 2017 Coleman SBA BDO Professionals of the Year. There will be 5 finalists. We've announced an event in Napa in May. Check it out.
Bob Judge, CEO, Government Loan Solutions. Last year, Bob, we unveiled the Coleman SBA Professional Lenders of the Year Awards, and we had a great time doing that. You and I talked and said, and you came to me and said, Bob, how come you didn't honor the BDOs, business development officers. And I said, well,
Exactly.
I didn't think of it. And you said, I have a great idea. What's your idea, Bob?
My idea basically is to recognize the people who are the boots on the ground. I mean, lenders get a lot of recognition in the market. There's the SBA gives them awards and such, but you really don't have anything in the industry for the people who are actually out there doing the legwork and bringing in the loans and doing the great job that's necessary to lend to the small business borrowers on Main Street. So, we're a company right now. We've been in business for 11 years. We've been fortunate to grow to a point now where we feel we can give back to the industry. And again, we prefer to give back, in this case, to the people who are actually doing the day-to-day work. And so we came up with the idea of doing a BDO of the year. And again, it has not been done. And of course, Bob being my good friend and also a good friend of GLS, we work together on other stuff that he was the perfect partner for this endeavor. So that was kind of how it started. And this is year one, hopefully, of many future years.
Well, I'm excited of the format. What we're going to do is we're going to pick 5 winners, and we're going to bring them all together out to Napa at the end of May on your dime. We're going to have a BDO summit. We're still working on the agenda, but we'll do roundtables or actually just conversations led by Bob and I. We'll bring in a guest speaker or two, but it's going to be focused on SBA BDO issues. It's going to be a great event, so I appreciate you doing that. Bob, the judges, I'm a judge, so it says Coleman, and your name is Judge, so you're a judde.
I was born to the role, yeah.
Who's the third judge that we're going to be picking from the industry?
The third one is Brent Trulino. Those of you who are familiar with the hierarchy of the SBA in the past, he was the head of Okram. Obviously, a very knowledgeable person in the industry, and as well as very knowledgeable of SBA lending. So he was kind enough to join us in this endeavor. So he will be the third judge to determine who the 5 winners are.
Great. Okay, here's the drill. Go to our website. There's a simple application form. Fill that out. The date has been extended. We're going to go through February 28th. We want to accumulate as many people to be under worthy consideration as possible. The dates for the event will be May 21st to May 23rd in Napa Valley at the Bardesino Spa and Resort. So that's sort of the
which is, by the way, an awesome place for those who are want to look it up on the internet. And it's BARDESSONO Hotel. Again, a beautiful spot. I'm really looking forward to going myself because I think it's going to be a great time. So I mean, definitely, it's going to be a great event. Hopefully, looking forward to doing it myself.
Well, see, you didn't have to spell it out because we have this thing called editing technology, so we're going to put that all over the screen. But we appreciate you doing this, Bob.
Oh, no problem.
Thank you for co-sponsoring with this. It's going to be a great competition and great event that we're going to be doing in Napa. And please submit your nominations. Bob Judge,
yes.
CEO, Government Loan Solutions. Thanks, Bob.
Thanks, everybody.
Thank you for joining us today for the Coleman Report Update and for supporting America's Main Street, one entrepreneur at a time.